And it's 1 p.m. Time to go around the world of business in 55 minutes. That's what we're doing on Business Incorporated. Here's what we have for you on the program today. We're still on that high cost of living in Nigeria as the NBS releases the price of kerosene. Kenya Central Bank unexpectedly hikes rate. And Egypt's trade deficit is now at about $36.90 billion. Great to have you on the show. Good afternoon. I'm Ini John Mekwa. Let's delve into the world of business now, beginning from a global grain. Chicago soybean futures declined on Wednesday, with the market's focus on higher production in Argentina, while corn prices dropped to the lowest in more than 3 years. Wheat lost ground amid ample Russian supplies. The most active soybean contracts on the Chicago Board of Trade fell 0.9% to $11.89 for a quarter of a bushel, snapping into sessions of gains. Corn lost 0.9% to $4.35 a bushel, the lowest since December 2020, and wheat gave up 0.3% to $5.93 a bushel. Traders squared positions ahead of two key crop reports on Thursday from the U.S. Department of Agriculture and Brazil's CONAB, with a keen focus on crop production updates for Brazil and Argentina. Brazilian farmers have sown 27% of the area expected to be planted with second corn in the center-south, marking the fastest pace for second corn planting since records began in 2013. And also we look at others, how it affects Nigeria, that is. But before that, let's see what's going on in the global oil space, where prices rose for a third day on Wednesday after the U.S. crude inventories grew less than expected, and a cut in the forecast for output growth in the U.S., which is the world's biggest producer, eased concerns about potential oversupply. Brent crude futures were up 0.83% at $79.23 a barrel, while U.S. West Texas Intermediate crude climbed 0.87% to $73.97. For 2024, the U.S. Energy Information Administration on Tuesday cut its outlook for domestic oil output growth by 120,000 barrels per day to 170,000 barrels per day, and sharply lower than last year's 1.02 million barrels output increase. And then the EIA also forecast U.S. production would not exceed the December 2023 record of more than 13.3 million barrels per day until February 2025. Let's head to Nigeria now, where you might have been noticing those long queues at filling stations, and some filling stations shut down, especially the NNPC outlets. Well, the Chief Corporate Communications Officer of the NNPC Limited, Mr. Olufemi Shoneye, has shared the company's stance on that, and he said that the recent queues are not because of lack of supplies, but products remain readily available, according to him. And he said that the recent tightness experienced in certain areas was due to brief distribution issue in Lagos, and promises that it has since been resolved. So, of course, Lagosians would await the resolution spilling over to the filling stations. Now, consumers of household kerosene in Nigeria are grappling with higher costs as the price surged to an average of 1,362 naira per litre in December 2023, exceeding the prices of petrol, diesel, and cooking gas. On Wednesday, the National Bureau of Statistics revealed a 5.8% increase compared to the 1,287 naira recorded in November 2023. According to the NBS data, in December 2023, the average retail price per litre of premium motor spirit, that's PMS, petrol, was 672. Automotive gasoline was, that's the AGO, was 1,227 naira, and liquefied petroleum gas cooking gas mostly, particularly in a state like Jigawa, cost around 1,145 per kilogram. Year-on-year analysis indicates a 23% increase in the average retail price per litre of kerosene, rising from 1,105 in December 2022. The state profile revealed that Abuja, the Federal Capital Territory, recorded highest average price per litre at 1,650, followed by Ogun State at 1,610, and then Benue State at 1,594 naira. Conversely, the lowest prices were observed in Kwara State at 917 naira, Rivers State 970 naira, and Nasarawa State 1,071 naira per litre. Well, talking of Benue State, Fitch Ratings has announced that it has assigned a long-term foreign currency issuer default rating of B- to Benue State, along with a stable outlook. This rating reflects Fitch's assessment of the state's credit worthiness and highlights its ability to meet its financial obligations. The rating indicates an acceptable level of credit worthiness that can be vital to attracting investment and encouraging economic development and building sustainable partnership. In reaction, the state government believes that the Fitch rating will facilitate access to global capital markets, allowing the state to secure funding for infrastructure projects, social welfare initiatives, and other developmental programs. Well, still staying in Nigeria now, the Bank of Industry and International Financial Corporation are in collaboration to build skills and also seek ways of making funds available to businesses in the country, especially small businesses. And they're looking at alternative forms that could be available for small businesses. It's a story of collaboration between the Bank of Industry, the BOI, and the International Finance Corporation, the IFC. The story has its focus on industrialization as a key pillar of economic diversification. This and more are captured in the sessions.
We aim to cover 3 key sessions today. Session 1 focuses on industrialization as a pathway for economic diversification. The second session focuses on increasing access to funding through risk mitigation. A third session focuses on unlocking sustainable funding for industrialization.
But before the sessions begin, the Regional Vice President of IFC for Africa, Mr. Sergio Pimenta, sets the tone with his keynote address. The content of his address is the findings of the new IFC report on Nigeria's credit infrastructure reform.
This report found that the Credit Reporting Act and the National Collateral Registry have increased access to finance for borrowers. According to the 30 financial institutions surveyed for this report, the number of borrowers accessing formal loans increased significantly in the years from the most recent credit reforms up until 2020.
Then the panelists take over. The first session had the theme, Industrialization as a Pathway for Economic Diversification.
We are quite behind when it comes to industrialization and particularly manufacturing. This has a significant impact on the healthcare sector. We are a sector that is extremely import dependent.
The first element which you mentioned is policy, very clear and directional, intentional as well. What exactly do we want to achieve? Are we trying to build an industrial sector, like you remarked earlier on, focused on import substitution?
The second session is on increasing access to funding through risk mitigation.
What are creative products, creative structures, creative, risk mitigating options that we can put out there to help financiers more comfortably push out loanable funds to industry? Thank you.
Thank you so much. I put your question as twofold. The first part of it is within the banking industry, how they assess the borrowers. They use the traditional methods of credit history, financials, collaterals. The SME and the startup business will not meet all these criteria. So there has to be innovative ways of doing it.
What we also do with the partial risk guarantees and corporate guarantees or credit risk guarantees. So we also work with that also as a way of mitigating this risk.
Some of the options shared for funding sustainable industrialization at the end of the conversations include private capital funding as well as green funding. So from funding to looking at productivity and, of course, we always talk about investment opportunities in the area of the workers' welfare. We've seen the Nigerian government attempt to spread or accelerate the growth of the health insurance. I wonder how you would grade that. But let's find out who can tell us how she sees that. Today, Dr. Tinuola Akimbolagbe, the Managing Director and Chief Executive Officer of the Private Sector Health Alliance of Nigeria. Thank you so much, Dr. Tinu, for your time. I hope I can call you that. Yes, I'm a friend, Dr. Tinu, so it comes so easy to me.
Thank you for having me.
Good to have you. So we've heard and seen a lot of attempts. Lagos State government has its own attempt at health insurance. Of course, the federal government does have NHIS. Some hospitals do accept it, others don't. From your perspective, how have we done when it comes to pushing the insurance to reduce out-of-pocket payment for, well, in this case, we look at the employees, the welfare of employees?
So the initiative to actually establish health insurance in Nigeria is good and has taken quite a number of years in the making. The law was initially passed in 1999. So we've been at it for close to 20 years. Could we have done better? Yes, definitely. Right now, the coverage is at less than 10% of the Nigerian population. And of that 10%, I think the bulk of them are within the civil service and the organized business sector, the organized private sector. A large proportion of Nigeria, which is the informal sector, are not covered. So there are lots of arguments about the specific rate of coverage, but everybody agrees that less than 10% of the Nigerian population is covered by health insurance.
Have you followed the story of Lagos State? Because I believe they do have Ilera Eco,
yes.
You know, which they try to incorporate the informal sector. How is the response to that?
Well, Lagos State, as usual, is a pace setter in health in Nigeria, and the initiative of Ilera Eco is a laudable one, and they're the first ones to even take it up to try and bring the informal sector on board. It's had a mixed reception. It's still at the early stages, so it's a bit difficult to assess that. There are a few other states, Kwara State, Delta State, that have made significant strides in health insurance coverage for the informal sector, community health insurance and all that. But there are huge variations across the nation. And with the recent incorporation of the NHIA law, which was done in late 2022, I think that's the last thing that the Buhari administration completed before they left. We do expect to see that implemented shortly. And with that, we should be able to achieve good coverage across Nigerians.
Are there opportunities in there for the private sector? We do know once the private sector gets involved, the private sector is there for profits. The government can do it for social reasons, you know. So are there opportunities for private sector investors?
There are huge opportunities for private sector. So my organization, the Private Sector Health Alliance of Nigeria, PSHAN, is at the forefront of elevating the business voice to policymakers and fostering collaboration between the public and the private sector in the area of health. in many countries, the healthcare sector is a large contributor to the GDP. In Nigeria, we really don't have that. We have medical tourism outbound, where we should have medical tourism inbound. And health should be a sector that actually contributes to the GDP.
But is it true?
People.
Sorry, let me
Yes.
just interrupt your thoughts there. I hope you will be able to pick it up. Is it true that it's beginning to reverse? Because it's been noticed, for instance, that costs, it's less pricey in Nigeria, labor costs and all of that. Is it true that we're beginning to see a reverse, even though, you know, it's the early days yet?
Yes, that's true. We're starting to see some reverse tourism, especially with Nigerians who have studied in the diaspora and come to set up their own establishments here. So people find that it is easier, more affordable to come and have some of their procedures done here, you know. But there's still a lot of room for improvement, even on that. The present administration seems to have started off with the right footing. The current Minister of Health and the Minister of State for Health and all the heads of the agencies have a good framework set out, which we're hoping that we'll see implemented very soon. They've been very consultative with members of the private sector and related stakeholders, and we hope to have them roll that out soon.
So you were talking about the opportunities for the private sector in the midst of this healthcare.
Yes, so there are many opportunities for the private sector. There are opportunities for the private sector at the primary healthcare level. There are opportunities for the private sector at the tertiary healthcare level. Working with the government, if we have a proper PPP framework, which is easy for people to plug and play and roll out, then we can have the private sector supporting the government, because healthcare infrastructure is quite expensive. And a lot of the infrastructure that we have was built back when the population in Nigeria was nowhere near the numbers we have now. So they're straining. So for the private sector to be actively engaged to invest in healthcare, there must be some incentives put in place.
What kind of incentive and what areas of investment? I mean, I know now, as somebody was saying, we've had some multinationals leave the country. Is this an opportunity for local production? You know, even though mostly we'll be importing the ingredients. So what are those areas where people can actually?
Yeah, so there's some low-hanging fruits, for want of a better phrase. Local manufacture of pharmaceutical consumables, drugs and all that, that can be done. Generics and all that. So if the government puts some steps in place, I know that discussions have begun with some private sector manufacturers to have that, because over 90% of our medication in Nigeria and other African countries is imported. Also, with the domestication of vaccine production, there are a lot of discussions in the works with private sector players across the country. I mean, recently I read in the papers, I think just yesterday, that in the last 10 years, we spent close to $40 billion on education and healthcare in Forex going out of this country. That's opportunity. That is the size of the opportunity that is available for the private sector to key into in Nigeria.
What incentive do you think could make this, you know, make the private sector run to grab these opportunities?
So there are various incentives that could be put in place. Some of the obvious ones would be tax benefits. Some of the not so obvious ones would include some type of arrangement. As you said, the private sector is there for profit. So if a clear arrangement that can be made and all these can be signed off and they're valid, then we can get the private sector interested in investing in the healthcare, particularly at the primary care level and at the tertiary care level. I see at those two ends a lot of opportunities.
Good enough. You said that the current administration is having a lot of handshake with the private sector. So we hope these ideas will spill,
Yes.
you know, rub off, and then we'll see it in paper and signed, as you said. All right. Thank you so much for your time, Dr. Tinuola Akimbolagbe, the Managing Director, Chief Executive Officer of Private Sector Health Alliance of Nigeria.
Thank you for having me.
Welcome back to watching Business Incorporated right here on Channels Television. Just before we head to the market, let's stop by at London and see what's going on there. And I think Halifax has released data on UK house prices. And Juliana will always tell us, well, if you own a house, then of course the value is increasing. But if you are a tenant, you know, then of course the hike in price is not to your favor. But let's have Juliana help us to balance these data from Halifax. Hi, Juliana. Good afternoon. So, Juliana, I was just trying to find out if you could give us the details of the data from Halifax, you know, on the house prices in the UK.
You're absolutely right. It appears as if the sector has defied earlier predictions of a slowdown, because according to the house price index, which was released by Halifax, the UK lender, this morning, UK house prices continue to grow. In fact, for the fourth consecutive month, they have risen to the highest level since October 2022. So the average price for a UK household is, hold your breath, £291,029. And this figure is nearly £4,000 higher than it was in December last year. And there are various factors that have contributed to that surge. One of them is the Bank of England and the fact that Andrew Bailey, the governor, has indicated that interest rates will finally come down. We're not sure when, but certainly this has led to lenders becoming more competitive. So a lot of the mortgages that are on offer at the moment are much lower than they were this time last year, when, of course, the market was reeling from Trussonomics, and at one point I think there was some mortgage rates being offered at 6.5%. It's since come down, so demand has surged, and I believe there's also consumer confidence, right? So yes, we are going through a significant cost of living crisis, but there are particular households across the country that do have more money in their back pocket, and they are deciding to purchase homes. So demand is there. We're not building as much homes in the UK as we should. Therefore, landlords are able to increase the cost. The only issue is, of course, if you are somebody who is a first-time buyer or a prospective buyer and you want to get on the property ladder, trying to find a deposit to afford an average home of £290,000 is very difficult, as you can imagine. But a good thing for the sector, and of course this trickles down into the wider economy.
Yeah, well, I can imagine £291,000. Where do you even begin from? But let's head to the markets now, see how that's doing intraday.
Yeah, it appears as if red is the colour of the UK blue chip index at intraday. Quite surprising, actually, because we did start in the green, but I think there were some comments made about perhaps MPs from across the House pulling in the Bank of England to discuss interest rates and when they will finally come down. I think that may have rattled investors at intraday. The all share is down by 0.14%. The FTSE 100 is down too by 0.16%, and the FTSE 250, the domestic market, that's up by a smidgen at 0.01%. In the currencies market, the British pound finally turning a corner. It's now trading up against the US dollar, up by 0.28%. Also, it's trading up against the euro by 0.18%. And the British pound at intraday is trading up against the Japanese yen by 0.5% in a.
All right, Juliana, thank you so much for that. All right, now let's head to the market, and Will Ebong is standing by with intraday numbers. Will?
Good afternoon, Nini.
Good afternoon.
Definitely, I've got market numbers from Africa, and we're going to begin straight away, starting with markets with major equities in Africa, where they were trading mostly in positive territory. Well, they were trading mostly in positive territory, but we saw a bit of recovery for the NGX. But at the time I came into the studio, hearing that the market is back in the red. We're looking at Nigeria's NGX. It's down now in marginal, in red territory right now. Earnings season is still on. Stocks, companies are still filing in their corporate earnings, but we're not seeing investors reacting so much to that. Now, meanwhile, South Africa was also trading in red territory, 0.17% down. Let's go to Egypt. Now, the EGX 30 was up massively at intraday, 3.35%. There's been that recovery from that dip yesterday. We saw that over 2% dip for the EGX, but the investors probably took advantage of that, buying that dip and, having that index up 3.35%. Now, talking about yesterday, we still have Kenya in the green on Tuesday, 0.04%. Now, let's go quickly and get a deeper sense of what's happening at the NGX behind the scenes. And we have Azizat Awonuga, securities analyst, Parthian Securities Limited, to give us more details. Good afternoon, Azizat. Good to have you on the program.
Hi, good afternoon, Will. It's
Okay,
good to be here.
Azizat, first off, I did talk about the NGX being in the green much earlier in the day. At intraday, we saw that marginal, uptick. But I was just wondering, as I was speaking to you, said the market is in the red now. What stocks are responsible for this dip at the NGX?
Okay, so today we saw a marginal gain at intraday, as you earlier mentioned. The market was a bit slow today. Volumes and values were not as high. So we saw a total volume trade of about 176 million units, value at about 3.2 billion, right, at midday. And most interestingly, the market movers who were the highest volume and value traded, which is Transcore, UB, and GTCO, are all in the negative. And that might have, triggered that marginal turn into the negative from positive. So right now, the market is at about minus 0.14%. And I would say it's mostly attributed to Transcorp UBAGT.
So Transcore, speaking of Transcore, what are the sentiments there? What are investors looking at for selling off that stock price at the moment? In the stock?
Okay, so currently, right through the market, we're seeing a lot of profit taking, which was quite expected if we're being fair. The market has been rallying since December into January, and investors actually like Transcorp as a stock. It's a fan favorite, as I like to call it. Currently, as a midday, around 12:30 thereabout, it was losing about 4.9%. To 13.5 from 14.20 that he opened at, right? But I don't think it is, a total doomsday downturn. It's just the market, I won't say reversing, but investors are taking profit because right now, as you mentioned, earnings seasons, as results are coming out, it's not making that much a significant impact as, we would like to see, maybe because the banks, at least the FUGAs, the top guys, are not yet all out with their audited results, although some unaudited numbers are starting to be out. And it's not so bad, but investors just want to, cash in on their money.
Especially this is January, and a lot of people have expenses to make. I did mention yesterday that school fees is topping that list, and other things that we have to do in January. This year, beginning at the start of the year. So we saw that news coming in yesterday. Owando from the court saying that it had adjourned the hearing date to April the 17th. How has that stock performed since the news came out yesterday? Can you share some light about that?
Yeah, so I mean, right before now, this is not the first adjournment that's happened, on this Owando case. It's been coming for, I think it's even over a year, if I'm not wrong, right? So right when the news came out, which was yesterday, Owando declined by about 8.33%. So it closed 8.33% low, and as a midday today, it was down 3.4%. But right, I will still say that the sentiment is still due to general profit taking, although some investors might have exited that position due to the news. But if you've been in the market for a bit, we've had this news like a couple of times. Also, investors were positioning ahead. So when the court hearing, goes through, they'll be able to, if they're still going to, be delisting and selling investors, they'll be able to position for that. And now that this has moved to April, investors who have already made money can exit their position and then reposition against the hearing in April at lower prices.
That's very interesting.
Yeah. So.
No, go ahead. What you were saying?
Okay, I'm just saying the fact that, there's that volatility in the stock due to the news around it and the fact that fundamentally it's not so bad and the industry is doing well, it makes it good for people who are trading. So the price fluctuations makes it in a trader's choice.
But
So I feel like it was
in your opinion, do you think O&O is going to delist? Some people think they're not going to delist.
Yes, actually, but we can't put it. We can't put a full stop in it and say, oh, they are or they're not going to. But yeah, you're right. There's sentiment that they probably won't go ahead with it. But they haven't officially come out to say that. So we're just going to take their word as is and take the last official thing they told us, which is that they're going to delete. But yeah, you're totally right. Sentiments are saying that is highly unlikely.
Okay, let's zoom in on the consumer goods sector. We saw Boa Foods making waves this afternoon. Well, at intraday, it gained about 10 naira 90 kobo or 18 naira 90 kobo. Oh, 10 naira 90 kobo, to be correct. But what is it trading at currently? Is it still maintaining that, sustaining that upbeat momentum, or is there any decline in the stock price?
No, it still is. It still is. I'm still Boa Foods is up about 3.8% today, gaining 10.90, as you said. I mean, yes, it's gaining, but I can still see that there are more suppliers than people actually demanding for the stock, which is not so bad because a lot of people have made some money on it since the year started. It's a good stock. It gained today, but I feel that we might see some decline in it because the suppliers are way more than the buyers currently. And I mean, it's not even trading at that price of it's plus 10.9 today. Yeah, because 100,000 units haven't been done to bring the prices down, but it's trading lower than that.
Okay, so let's just talk about the Dangote Sugar and Nascon since we're still talking about the consumer goods sector. We know that merger is still in the works. We're waiting for the approval from the SEC to just cement that, seal that deal. But looking ahead, investors are taking profit, but do you see them staying, or what do you see the share price, the listing for the Dangote Sugar and Nascon? What are you hearing from that? Any news sound bites coming in from that company?
So for now, no. There are no official sound bites coming in from the company, but then analysts are speaking and they're, saying in the ranges of about 80 naira to 100 naira. For the fact that we've seen Dangote Sugar reach 80 levels and above, it most likely will list above that, right? And I feel like it will be capped at 100. Maybe not. It might be less, it might be more. But let's say 80 to 100 is what we're looking at.
So how do you see the market closing today? I know it's already still in the red, but do you think it's going to flip and go into the green zone?
It's most likely not going to flip. So let's just say, even if it will close positive, it will be marginally positive, but highly likely to close in the negative. Highly likely because the large cap stocks are negative, or there's just little activity as we would have seen on a typical trading day. So yeah, most likely negative.
Thank you so much, Azizat Awunuga, Securities Analyst with Parthian Securities Limited, for sharing your insights on Business Incorporated. It's always good to have you.
Thank you for having me.
So now we zoom in on the Middle East. See, where trading for major equities was mostly positive at intraday. We saw Abu Dhabi trading up 0.14%. Dubai, however, in the negative 0.38%. Still within the region, we see Saudi and Qatari indexes trading in positive territory, 0.5 and 0.51%. That's a good one for the market. But let's look at US and see how they performed in early trade today. They were slightly higher today as investors, assess another slate of quarterly results halfway through, the corporate earnings season, still the earnings season for most companies around the world. Now, futures tied to the Dow Jones was up 0.37%. S&P futures up 0.23%, while the NASDAQ 100 futures was just up slightly by 0.07%. Meanwhile, let's check out yesterday's performance with our correspondent, Maria Bird.
The U.S. stock market closed in the green on Tuesday, and the Dow Jones was up at 0.3%, the S&P 500 up at 0.2%, and the heavy tech Nasdaq just slightly up at 0.07%. It is clear that investors are hopeful that the Fed could see interest rate cuts sooner than expected. There was some bubbling on Tuesday that we could see interest rate cuts before the end of the year, which made many investors hopeful that we could see some positive upswing in the U.S. economy. As the U.S. enters into the month of February and gets ready for the second quarter, it is clear that investors are hopeful that we will see some positive upswing in the U.S. economy.
Thank you, Maria. Now we're just checking on Asia and see how stocks performed. They were mostly high, if I have to tell you that for free. Wednesday today, we saw the Nikkei closing of 0.11% up. South Korea's Kospi is up 1.3%. We see but when we look at Hong Kong, we see that index down 0.34%. Now let's look quickly at the next slide and see while Shanghai, the Shanghai market in China, that's mainland China stocks, was up 1.44%. And in Australia, we're seeing the S&P ASX 200 closing up 0.45%. Most of these stocks are making a recovery. Yesterday, we did see that surge in some of the stocks, but today they closed in the red. Some of them are not doing so well, especially with tech stocks. EV markets and Tesla, everything happening at the same time, and Ford saying they're going to release, another car to match Tesla's model. Waiting to see how that happens.
Competition is good for the consumer, so let them go ahead. All right, Will, thank you so much. All right, let's go to Europe now and see what's happening there. It's another strike. Unfortunately, strikes are not over. Germany's winter of industrial action continues as the union's largest trade has now, that's Germany's largest trade union, has announced a warning strike by airports, ground crew, and technicians. So you can imagine what disruption that will bring to hit the air travel in Germany and affect travels. But let's have Chiponda now. Chiponda Chimbelu joins us from Berlin to give us the details of it. Hi, Chip. Another strike, another grounding of activities in the economy.
Well, thanks for having me, Eni. This strike is about a wage dispute. To cope with the country's inflation in recent years, Lufthansa has offered workers a 13% salary hike over the next 3 years and a significant one-time inflation compensation bonus. But Germany's largest trade union, Verdi, says the increments are too low. It rejected Lufthansa's offer in the second round of negotiations, and it is putting pressure on the company with a warning strike that will last for just over 24 hours from early morning today to Thursday mid-morning. Now, the strike will affect passengers traveling through Lufthansa's main hubs, so that includes international airports in Frankfurt, Munich, and Düsseldorf. More than 100,000 passengers could be affected, with anywhere between 80 and 90% of Lufthansa's flight schedule cancelled on Wednesday, today. That's why Lufthansa has advised its passengers to make sure their flight hasn't been cancelled before heading to the airport.
Yeah, but it's not just about Lufthansa. There are other strikes, and there have been others in the country.
Well, any inflation and a worker shortage are two reasons. Salaries haven't just been rising fast enough to cope with the inflation we saw during the COVID-19 pandemic and the energy crisis from the fallout of Russia's invasion of Ukraine. Ordinary Germans have seen their spending power shrink. And that's at a time when most of them are dealing with shortages on their teams. So there's often more work with fewer people to do it. And that's what we are seeing now, especially in the transportation sector. The strike today is just the latest. So far this year, workers from the aviation sector, the rail sector, and even local transportation networks across cities have held strikes. For trade unions, the fact that there's a worker shortage means they have more confidence to carry out strikes and put pressure on employers. And workers are noticing that. Membership in trade unions rose last year. Now, that said, it's also worth noting that Germany is far behind countries like France and Italy when it comes to strikes.
And I wonder how the market is taking this, their stocks especially.
European stocks are expected to trade higher today, Inni. Now, that's on the back of good news from China. Investors are anticipating forceful measures from Beijing to help prop up markets there. And here in Germany, the Frankfurter Allgemein has reported that German Chancellor Olaf Scholz will visit China in April with a business delegation. Now, that will be something that investors will be watching. And in terms of data, German production figures for December are due today.
All right, Chip, thank you so much for that update. We'll do it again tomorrow. Now, let's come to the continent of Africa. The International Monetary Fund, as the IMF, has revised its economic growth projections for South Africa downward, citing logistical challenges that are impeding activity and negatively affecting the broader region. Africa's most industrialized economy is anticipated to experience a modest growth of 1% this year. In contrast, the IMF foresees a positive trajectory for Nigeria. That's for next year. But putting all of this together, our correspondent in South Africa, Innocent Semosa, sent in this report.
The International Monetary Fund expresses concern regarding South Africa's precarious fiscal position and high levels of public debt.
Our forecast for South Africa starts with what happened in 2023, a very low growth year in the context of power disruptions. 0.6% is our estimation of what growth was in 2023. But then in 2024, we see a gradual increase towards 1%. That is a lower number than we had in October, by 0.8 down. And the main reason for the downgrade there is that there are some additional disruptions in the logistical sectors, rail, ports, and that combined with the continuing challenges still with the electricity production.
The IMF sees sub-Saharan Africa growing by 3.8% this year. However, external shocks continues to pose a challenge.
One of the things about the sub-Saharan African region is it's very exposed to external shocks. And we've had a number of adverse external shocks in the last few years. The Russian invasion of Ukraine and the associated energy crisis, the surge in food prices, the tightening of policy rates in major central banks around the world that has increased interest rates and therefore increased funding cost.
Could you kindly please talk to us about Nigeria's GDP growth projection? And also, I would like to inquire about your assessment of the banking sector, external debt, any recommendation for sustainable economic development in Nigeria. But also, still on that, in that region, speaking about ECOWAS, there are some countries that are threatening to leave. How much of a blow will that have on trade? Because there are some people who are using ECOWAS passports for trade and investment. Thank you.
So on Nigeria's growth rate, we have, as has been pointed out, a slight downward revision for 24 this year, 3%, so negative 0.1 percentage point. Next year is unchanged at 3.1%. And on the impact of Mali and Niger and Burkina Faso leaving ECOWAS that was announced yesterday, this is something that, of course, we're monitoring. We're taking note. It's a bit early to assess.
The International Monetary Fund says that geopolitical tensions remains a threat for trade and investment. They say that expansion remains slow, but also they're advocating for steady fiscal consolidation. From Johannesburg, South Africa, Innocent Semosa, Channels Television News.
All right, now let's go to Kenya, where the central bank surprised financial markets by raising borrowing costs to their highest level since 2012, as risks to inflation remain elevated, and to support the shilling, also the bonds fell. The Monetary Policy Committee lifted its benchmark rate to 13% from 12.5%. Governor Kamau Thunge said that in a statement that the raise, the third since Thunge became governor in June, is the seventh in the current tightening cycle that started in May 2022 and brings the total combined increases to 600 basis points. The decision was effectively giving commercial banks the signal to increase their lending rates, setting up borrowers for a new era of expensive loans. Egyptian Minister of Trade and Industry Ahmed Samar has said that the country's trade balance deficit declined by $11.15 billion in 2023 to $36.908 billion compared to $48.66 billion in 2022. A ministry statement by Samir said that the merchandise exports exceeded 2022 records to reach $35.65 billion in 2023, while imports decreased by 14% annually to $72.54 billion in 2023. The statement also notes that Turkey, Saudi Arabia, and the UAE, Italy, and the US were the top markets receiving Egyptian exports last year. The minister explained that Egyptian exports to non-Arab African countries achieved a significant increase of 7% to reach $2.24 billion, noting that Egyptian exports to Arab League countries amounted to $13.4 billion. Exports to the EU stood at $5.50 billion last year, and merchandise exports to the US hit $1.96 billion. Meanwhile, the Minister of Planning, Economic and Development, Hala Al-Said, said that the government is spending rationalization plan that will affect the economic growth target for the current fiscal year of 3%. Now, President Samai Suluhu Hassan is set to host her Polish counterpart, Andrzej Duda, who is expected to arrive in the country tomorrow, February 8, 2024, for a two-day work visit. The visit seeks to cement historic diplomatic ties between the two countries that have existed for many years, especially in the areas of infrastructure. The Polish leader is also expected to visit a treatment project at the Aga Khan Hospital in the city that has received $1.137 million funding from Poland. The project aims at providing assistance in treatment and education healthcare service providers in the city of Dar es Salaam. Obviously, that's in Tanzania. Let's head to the crypto space now and see what the numbers look like this afternoon and see if the Bitcoin is up, if we could have those numbers right there to see the price. And of course, the market is still greedy, but I'll take that with a pinch of salt, judging from what our analyst said yesterday, that it's not, you can always say you would sell and make profits when the market is greedy. So it's a greedy market from the numbers, but you need to check your portfolio, check your wallet and see if it's really a good time, a greedy time for you as a personal investor. Let's see the numbers. Let's see the prices. There you have Bitcoin has gained compared to yesterday, up 0.39%, still struggling around the 40s. I wonder when it to get to 45. And I read that some Bitcoin miners have started selling off towards the halving. You know, the halving is this year. So we're looking forward to that. Ethereum also gained 1.70%. To settle at 2,371.94. BNB is at 303 after it gained 0.17 Cardano. And XRP we see has recovered from the negative sentiment it had yesterday at this time. Gained marginally though, so it's still on the edge, you know, so it doesn't fall off. It's at about 50 cents. Let's see the other numbers right there. Top gainers, we see a good number for the DYM, but I can't say that for others. We can see the difference is really, I think it would be nice to drill down on this. We have Joe Pata Gilbert. Hi, Gilbert. Good afternoon.
Yeah, good afternoon, Mrs. Zini.
Yeah.
Great to be here.
Good to have you. So we saw, when we look at the gainers, the top gainers, we see DYM gained about 26%, more than 26. But, you know, the difference is just so obvious. Is there any explanation for this?
Okay, I've not followed the recent more fundamental developments on this particular asset, But typically during season like this, and whenever you see a Bitcoin having or trying to recover from the market, we always see some smaller market cap currency always amplify the returns of whatever Bitcoin is trying to do, because the market cap in these particular assets are always lower. And most time, it's always easy to fool some novice investors when they see a smaller market cap crypto moving. They all rush into it because they just think it will continue to go up for forever. It's just how the more of the novice investors out there treats the market. So it's typical to always see some particular smaller market cap asset amplify whatever the market is trying to do.
But why is Bitcoin struggling now? What push do we need? I know there's a certain conversation about regulation again. I think the Congress talking to Yellen about it and all of that. But what do we need? It's struggling. It's our Bitcoin. It should be moving.
Okay, interestingly enough, I know we've had conversation about Bitcoin right here, where in one of our conversations, we talked about some technical chart pattern that was going to lead Bitcoin to its previous $48,000. And from there, we also called a drawdown was going to take place. And this has happened. And then whenever I want to look at what I should expect from Bitcoin, as much as I pay attention to fundamentals and also macroeconomics, I always like looking at market structure and then chart pattern. After the dissipation period Bitcoin has had, it's more like if a boxer is fighting and is punched in the face and it falls to the ground, most time it takes time for this boxer to stand up. So Bitcoin has had its fair dissipation period, but then looking at the chart, Bitcoin right now has formed an inverse head and shoulder pattern. And whenever you see this is actually a bullish chart pattern that always appear at the end of a downtrend. And it always suggests that an upward reversal is about to take place. So, and then I was also looking at the Bitcoin chart as in just a few hours ago. On the smaller time frame, Bitcoin is also printing a bullish chart pattern. So these are both, okay, for example now, a bullish chart pattern is more of a technical trading pattern that also indicates that an impending continuation or a strong upward price movement is also waiting on the sidelines. So I think looking at the two chart patterns that we have, which is the inverse head and shoulder pattern and then the bullish peanut, Bitcoin right now can easily have an uptrend the moment we have buyers coming into the market, because this chart pattern is always a sign to tell you what is going on between buyers and sellers. So we may have buyers any moment from now take over the market because short sellers are already getting exhausted.
Sounds like you're saying it may be a good time for buy-in to Bitcoin.
Oh yes, it is. On a shorter time frame, shorter time frame traders actually think this is a good support level that they could enter if they are going for an upward swing. But then for long-term investors, the best time to have bought Bitcoin was January this year or December last year. And yet this is another opportunity to buy Bitcoin with a margin of safety. You don't want to be rushing into the market after we have hit an all-time high. You always want to have a margin of safety when you go into the market.
Yeah, well, some people had said it to get to 25, before that boom comes in. But, well, I mean, thank you so much, Gilbert, for sharing your thoughts with us this afternoon.
Yeah, thanks for having me.
All right, so that's it on the program today. Thank you so much for being a part of Business Incorporated. 55 minutes of good business conversation. I hope it was good to you too. You can repeat this experience by going to our YouTube channel, youtube.com/channelsweb, or you can do youtube.com/channelsweb, and then you go to Business Morning. That was 10 a.m. and then 1 p.m. I'll see you tomorrow. Enjoy the rest of your day. I'm Ini John McCall.